The Dow lost 557 points today. That's a 1.1% drop, the worst day for the index in weeks, and it tells you almost everything you need to know about what just happened. Here's what happened. Markets opened steady, expecting a quiet Monday. Then Iran fired a barrage of missiles and drones at the United Arab Emirates. 12 ballistic missiles, 3 cruise missiles, 4 drones. The UAE intercepted most of them, but a fire broke out at the Fujairah oil hub. It was the first major attack since the April ceasefire, and it told traders one thing very loudly. The calm in the Middle East is over. Oil reacted first. West Texas Intermediate jumped over 4% to settle at $106.42. Brent crude spiked nearly 6% to $114.44. And from there, everything else fell into place. Energy stocks ripped higher on the oil move. Occidental, APA, and Diamondback Energy all gained. That's the easy part of the trade. The harder part is what happened to everything else. Cyclicals got crushed. Industrials and materials led the losses. The Dow fell 1.1%. The Russell 2000, which tracks small caps, fell 0.6%. The S&P 500 slipped 0.4%. The Nasdaq held up best, down just 0.2%. But even mega-cap tech leaked. Apple down over 1%. Alphabet down nearly 1%. Nvidia, Broadcom, AMD, and Qualcomm all lower by 1 to 6%. The single worst performing stock of the day was Norwegian Cruise Line. Shares tanked 8.6% after the company beat earnings but cut its full-year guidance. Why? Middle East disruption and rising fuel costs. Royal Caribbean and Carnival fell with it. The cruise sector is the cleanest red on what happens when geopolitics meets a discretionary spend industry. Travelers cancel European trips, fuel costs rise, guidance gets cut, stock gets hammered. Now here's the part most coverage missed. Treasury yields rose. The 10-year added 6 basis points to 4.44%. On a war scare day, that's unusual. Normally, money runs to treasuries when stocks sell off and yields fall. Today, they rose. That means bond traders are pricing inflation risk above recession risk, even on a day stocks tanked. It's a small detail with a big implication. The market is starting to worry about the wrong tail. 2 stories pushed back against the gloom. Crypto stocks ripped after the Senate reached a bipartisan compromise on the Clarity Act, the digital asset market structure bill that's been stuck for months. Coinbase, Circle, and Robinhood all gained. And Berkshire Hathaway beat earnings in its first full quarter without Warren Buffett at the helm, with the company's cash pile climbing to nearly $397 billion. So what should you watch from here? 3 things. 1. Whether oil holds above 105. If it does, expect inflation prints in May and June to come in hot, which locks the Fed into hawkish posture. 2. The Strait of Hormuz situation. If shipping doesn't normalize, the supply story keeps oil bid for weeks, not days. And 3. Whether today's selling spreads. One bad day driven by news isn't a trend. 3 bad days in a row, and we're talking about a regime change. We cover the days the markets actually move, typically a few times a week, more when things get wild. Hit subscribe so you don't miss it. We'll see you next time.